Welcome to the latest Motley Fool scoreboard. I'm on in Chocolate Balloon. We've got longtime fools, Toby Bordelon and Lou Whiteman, giving a 1 to 10 rating to the largest defense contractor in the world, maybe even the galaxy. It's Lockheed Martin, ticker symbol LMT. First, we'll talk about the business, including factors like industry, competition. 10 is invincible. A 1 is hopeless. Toby and Lou both gave it an 8. We'll start with Toby.
Yeah, Lockheed's got a very strong position in the industry. It's a relatively diversified portfolio of products. Their long-term contracts and their entrenched position with the government, I think, provide some stability and predictability. In terms of competition, there isn't really anyone I'd say is clearly better. I mean, look at Boeing, right? I mean, Lockheed's just running away with that. So yeah, 8 for me.
Yeah, not Boeing, right? Just to add to what Toby said, these defense titans, they're platform companies. The F-35, for example, that's a Lockheed plane, that will generate $1 trillion in revenue over its lifetime for Lockheed and its subcontractors. Lockheed has a bunch of these decade-plus platforms. That is predictability. That is steady revenue. That gets you a really high score. The downside is some of that work is cost plus, and for all the joking, the government is pretty stingy about overpaying, so there are natural limits to margins. But look, this is a solid, predictable business that stands the test of time. A lot to like.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Toby's going with an 8, Lou's going with a 6. Let's start with that 6, Lou.
Yeah, it's kind of a wait and see 6. The CEO here, Jim, talent, easy for me to say. I believe he's the right person for the job, but worth noting that over the 4 years he has been on the job, Lockheed has underperformed the S&P 500 by almost 40 percentage points. There's a lot of asterisks there. There's supply chain woes, there was COVID, and they've warned the company was going to be in a low growth mode kind of in preparation for the next surge. So, it's kind of gone as they said, but still, it is a show me story from here, and it's a show me story for the CEO. So that did hold my score back some.
Yeah, I'm not sure I'd blame him entirely for the last 4 years because of some of the other things that you did mention. I think the company has been doing a good job of steadily returning capital to shareholders as they're continuing to run their business. Management's been pretty good at keeping the supply chain stable, considering all the challenges that we saw in COVID. And immediately after there, and a good job at keeping their partners happy. So that all adds up to an 8 for me.
For financials, a 10 is a fortress, a 1 is yikes. Toby gave him a 7, and Lou gave him an 8. We'll start with Toby, the lower score.
Yeah, there's strong cash flow here. Balance sheet looks reasonably good. Debt is higher than I'd like, but it is still manageable right now. I think the big thing you want to keep an eye on is sales growth. Or it's decent for the company for what it is. Maybe you'd want that to be a little bit higher. So track that the next couple of quarters. But across the board, we have seen improvements in operating margin, which I like as well. So 7, really good. Could perhaps be better though.
Yeah, sales growth is coming. They've telegraphed that. And if you look at the Pentagon playbook, so I'm not too worried about that. Toby mentioned the cash flow. We just got a 5% dividend hike. Lockheed has reduced its share count by 25% over the past decade. That's Home Depot numbers, a company that we always talk about in terms of share cannibal. This is a really good balance sheet, really predictable. Downside, if there is there's a big pension to fund here. I think $1 billion worth of contributions needed in 2025. So that does at least factor into things. But overall, a slow and steady income machine with some growth potential, really strong. That's another 8 for me.
Moving on to valuation, Lou. How well will Lockheed stock do over the next 5 years? And how safe is it? Keeping in mind, 10 is a sure thing, a 1 is a lottery ticket.
So you don't normally think of these as lottery ticket stocks, but I do think it can be a 10 to 15% performer over the next 5 years. We talked about it has underperformed over the last 4. This has been a period of laying the foundation for future growth. A lot of programs in the very the infancy where a lot of costs, not a lot of revenue. Next few years, I do believe that growth will materialize and the stock will outperform as a result. As for safety, I'm at a 9. In defense investing, you gain predictability at the expense of oversized growth. Lockheed Martin has a backlog of $165 billion in future business from a customer that has a 200-year history of paying its bills and the ability to print its own money if it needs to. That's about as safe as you can get.
Yeah, I went with 5 to 10% here on the stock growth. I think this one's going to match the market, maybe a little bit less. I think you do need to rely on the dividend here to get maybe what you call solid returns, which I think is perfectly fine to do. And to be clear, when I say that 5 to 10%, that's without factoring in the dividend there. On safety, I'd go with an 8. Listening to Lou, maybe he convinces me to push that a little higher. So I'm going to say 8 on the high end of the 8 scale, whatever that might mean to you. There's always some risk here, like a major accident or a screw up that could be problematic. But I don't really see anything dramatic happening unless you have a huge change in government priorities. This is a pretty safe company.
Now, wait, we do include dividends here, Toby. Are we still in the 5 to 10% for you?
If you do include dividends, total return, maybe you bump that up to the lower range of that 10 to 15% range Lou was talking about.
Is that your final answer?
Yeah, final answer.
All right. Let's move on to top it. Lou, is there a company in Lockheed space that you like better?
So it may seem counterintuitive, but in times of conflict, they tend to not be great for the defense contractors because the actual stuff is lower margin than when they have money to spend on R&D and stuff like that in times of peace. So it's not actually a great moment for the platform companies. The two subsectors in defense I really like for growth right now are defense IT and space. One company, Leidos Holdings, LDOS, has great exposure to both. I own both of these companies, but if I was to put new money in, Leidos is the direction I'd be looking right now.
Yeah, there's not really one I like a whole lot better than Lockheed Martin here. Maybe Northrop Grumman would get the edge from me in terms of innovation, but it'd be really, really close there. There are several government contractors I like better in the consulting space, but that's a really different business, and it's not really comparable to Lockheed. So I would go with Lockheed still.
Thanks to both Toby and to Lou. They've given Lockheed Martin a good overall score of 7.7 out of 10. Yes, I did factor in Toby's raising his returns expectations. That's still just short of the 8.0 that would force me to own shares for the next 5 years. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Netflix. Till then, Fool on.
The Northrop comparison is interesting because they kind of have a worse portfolio, but they have 2/3 of the nuclear triad, which is the most important thing. So, yeah,